We called the Tesla breakout over the past couple of weeks, but it looks like price action is compressing and sitting sideways, leading a lot of people to ask me, where do I think Tesla is going to be headed from here? Because on the daily time frame, this looks like it's overextended. But on the bigger time frames, it looks like price action can still move up to $500 by the end of this year. And for those of you who have been following me for a while now, you know that my end of year target was about $500, and we're only $80 off of that price level. So in this video, we are going to go over my updated price targets on Tesla by the end of this year, what I'm currently doing with my call options and my position, where I think Tesla is headed in the short term, and how I plan to manage my risk. If you don't know who I am, my name is Peter DiCarlo. I've been a full-time trader and investor for the past 11 years. I've grown my fund to over $5 million in profits using a very simple two-step trading system. Everything that I do is based off of that system. I don't take into account news, fundamentals, earnings, or any of the noise that is out there in the market. Now, the reason that we took this position on Tesla is because we are showing a very bullish setup. Over the past couple of months, we've had a resistance level right here of $360 to $350. Price was pulling back and bouncing on this support level each and every single time, showing us that there is a bullish squeeze in place. After price broke through that resistance liquidity zone, we knew that price was going to most likely skyrocket up to our first target, which was $400 to $420, and that has now been hit. Now, if we isolate out just my Tesla positions over the past couple of years, you can see that we're up over $1.9 million with a win rate of about 63%. This month, we've closed over $126,000 in profits. That's actually closed, not considering what we're holding on to right now. The most recent call options that we ended up taking a profit on were these right here, $58,000 in profits expiring 3/20/2026 with a $400 strike. Now, I closed that profit because we hit our first target. If you want to learn how to find setups like this entirely on your own and get access to the same smart money zone, BX trender, and volume profile indicators that we use in all of our analysis, we built a free training system just for that. It's linked below. There are over 20,000 traders using this system and finding success with it every day. And what I did was I took 80% of that money, took 20% off the table to manage my risk and lock in some sort of profit. I took the other 80% and I rolled it, aka I bought new call options, this time for an expiration of 3/20/2026 at a higher strike price of $450. Now, the reason I did this instead of just cutting the position entirely is because if we look at a weekly time frame, you can see that there's a very good chance that price is just going to continue to break out up to that $500 target that we've gone over for the past couple of months. If we zoom out even further, you're going to see that the monthly is showing that an even further breakout, maybe up to 600 by Q1 or Q2 of 2026 could end up happening. And so instead of just closing out my position entirely, I manage my risk by rolling out my trade, taking some of my profits off the table, opening up a new position, and just letting this trade play out. One of the hardest things about being a trader and an investor is just letting your profits run. If we take a look at all of my current holdings, this year, we're up about $1 million, and we have right now about $368,000 in unrealized profits on the table. These are all shares. Like, most of my biggest winners are up over 20, 30, 40, 50% in shares. And it's really hard each and every single day to not just take the position. Now, one of the things that new traders hear is that you'll never go broke taking profits and that taking profits is a good idea. If that's how your system works, then that's true, right? If you're somebody who has a 75%, 80% win rate, then you can take your profits very early. But for somebody like myself who trades at about a 50 to 60% win rate, I need to be getting paid 3, 4, 5 times what I'm making versus what I'm losing, which means I am going to hurt myself if I take my profits early. For instance, if we look at just our returns on Tesla, we only have a 63% win rate in the past 3 years. What makes our strategy so potent and so strong is the fact that our win rate is 2.44, meaning that our average risk versus reward is significantly outweighed to the upside. Our average profit is $17,000. Our average loss is only $7,000. So if I were to go and take all my profits off the table as soon as we get a breakout, I'm actually hurting myself. And I need you to understand how crucial and important that is, right? Our Zella trade score is a 92.7 when it comes to Tesla. And your trading score and your profitability has nothing to do with your win rate. We're not here to be right. We're here to make money. And so therefore, we have to let our winners ride. Now, if we look at this from a short-term perspective, I do think that there's a chance that price could pull back, right? One of the things that I teach you guys a lot when you're using our THT volume profile indicator, which is this gray indicator on the side, is that these thin areas of volume on the volume profile, price moves through them very quickly. So these moves to the upside can happen very quickly, but the moves to the downside can happen just as fast. So I'm going to be honest, it wouldn't be surprising to me if Tesla did pull back 15%, bounced off of the $360 support, and then rallied up to $500 by the end of the year. Because the same way that we broke out here is the same way that we could break down. And even if that happens, we would still be keeping bullish structure. We would still be making a higher low, then breaking out to 500 by the end of the year. So I'm pricing that into this analysis. But once again, I'm not going to try to time this, close it here, open up down here. That's all hindsight. That's all, it would have been perfect to do it all these other times until the time that you actually missed the breakout. I'm not here to time things to perfection. I'm here to just stick to my strategy. So short term, I do think that there's a chance the price could pull back, but I do think that by the end of the year, we're easily going to hit $500.